If your business finances are a mess right now, this video will fix that. I'm gonna walk you through the exact system to set up your small business finances from scratch, step by step, so you can stop guessing, stop stressing at tax time, and actually know where your money is going every single week. Because here is the reality. Most business owners I work with are profitable on paper, but have no cash in the bank. They're busy, they're making money, but they've got no idea why it feels like there's never enough left over. And the reason is simple. They never set up a proper system from day one. So today, I'm going to give you the 7 steps to build a financial system that takes 30 minutes a week to run. We're going to cover separating your accounts, setting up your bookkeeping, understanding your costs, building a budget, creating a cash buffer, streamlining how you get paid, and making sure tax time never catches you off guard again. If you follow this, you'll have more clarity, more control, and way less stress. So let's get into it. Step number 1, separate your business and personal money. The first thing you need to do, and this is a non-negotiable, is separate your business money from your personal money. I can't tell you how many business owners come to us with everything mixed together. Personal expenses on the business card and business income into a personal account. It's a nightmare to untangle, and it makes every financial decision harder than it needs to be. Here's what you need to set up at a minimum. You need a dedicated business account. This is where all your business income and all your business expenses come out. Nothing personal touches this account. Then you need a second account. Call it your tax account or your savings account. This is where you're going to transfer money for GST, PAYG, super, and even income tax. Every time money comes in, a percentage goes straight into this second account. That money is not yours. It belongs to the tax man. Treat it that way. If you want to go a step further, you can add a third account for paying yourself. But at a bare minimum, you need those two, the trading account and the tax account. The reason this matters isn't just organization. If you ever get audited, if you ever want to sell your business, if you ever need finance, having clean separation between business and personal is essential. It protects you legally, and it makes every other step I'm about to show you 10 times easier. So before you do anything else, open those accounts. Set up the structure. This is going to be your foundation. Step number 2, start tracking your numbers. Once your accounts are set up, you need a way to track what is coming in and what is coming out. Now, there are 2 options here. You can use a spreadsheet, or you can use an accounting software like Xero. If you are just starting out and your transactions are simple, a spreadsheet is fine. You do not need to overcomplicate it. But the moment you start invoicing clients, paying for suppliers, hiring staff, you need a proper setup. Xero is what most of our clients use, and it's what I would recommend for any Australian small business. Here is the key though. Whatever method you choose, you need to set up your categories correctly from day one. If you're a service-based business, your categories will look different to a product-based business. But at a minimum, you want to be able to see your revenue, your cost of goods sold, if you have your operating expenses broken down by type, and your profit. The categories you should set up now are going to determine how useful your reports are later. So don't just accept the defaults. Think about what you actually need to track. And here's the habit that makes this work. You need to update your books weekly, not monthly, not quarterly, but weekly. Set aside 30 minutes every week to reconcile your accounts, categorize your transactions, and make sure everything is up to date. If you fall behind, it snowballs fast. But if you stay on top of it weekly, it becomes easy. This is the difference between business owners who understand their numbers and business owners who are flying blind. Step number 3, understand your costs. Now that you are tracking everything, you need to understand what you're actually spending money on. Your costs fall into 2 categories, fixed costs and variable costs. Fixed costs are the expenses that stay the same every month regardless of how much work you do. Think rent, software subscriptions, insurances, and salaries. These are all predictable. You know they're coming. Variable costs change based on your activity. If you are a tradie, that might be materials. If you're an agency, it might be a contractor. The more work you do, the higher these costs go. But why does this matter? Because when you understand the difference, you can start to see your break-even point. You can see how much revenue you need just to cover your fixed costs before you make any profit. And here's where most business owners get caught out. They look at their revenue and think they're doing well, but they haven't accounted for all of their fixed costs. They haven't factored in the slow months. They haven't built in any buffer. So take the time to list out every fixed cost you have. Add them up. That number is your baseline. That's what you need to cover every single month just to keep the lights on. Step number 4, build a budget with a buffer. Now you know your costs. you can build a budget. And I want you to think about your budget as a plan for your money, not a restriction. Start with your expected revenue, but be realistic. Don't budget based on your best month ever, but budget based on what you can reasonably expect. Then subtract your fixed costs, and then subtract your expected variable costs. What is left is your profit. But here is where most people stop, and it is a mistake. You need to build in a contingency buffer. Things go wrong. Clients pay late, equipment breaks, you lose a contract. If you have budgeted every dollar with no room for error, one bad month can put you in a hole. I recommend building at least a 10 to 15% buffer on top of your expected costs. That gives you breathing room. And then separately from your budget, you need to be working towards an emergency fund. This is 3 to 6 months of operating expenses sitting in a separate account that you do not touch unless there is a genuine emergency. You're not going to build this overnight, but every month, put something aside, even if it's small. Over time, it adds up. And when something goes wrong, you'll be glad you have it. Step number 5, streamlined how you get paid. This is one of the biggest levers you can pull on to improve your cash flow. And most business owners do not give it enough attention. How long does it take you to get paid after you finish a job or you send an invoice? If the answer is 60 days or even 90 days, or I don't even know, you have a problem, because you can be profitable on paper and still have no cash in the bank if your clients are taking forever to pay you. Here's what I would recommend. First, if you can get paid up front, do it. If your industry allows for deposits or payment before work starts, take advantage of that. Second, if you are a service-based business, look at retainers with a direct debit. This is the best cash flow setup you can have. Every month, the money comes in automatically. No chasing and no waiting. Third, if neither of those work for your business, you need a strict debt collection process. Set your payment terms to 14 days and then send automated reminders when invoices are due. Follow up with a phone call if they do go overdue, and don't be afraid to have a tough conversation. We use a software called Chaser HQ that automates a lot of this. Emails go out, then text messages, and then phone calls if needed. It takes the emotion out of it and makes sure nothing slips through the cracks. The goal is to get the average time to get paid under 30 days. If you can do that, your cash flow will transform. Step number 6, set up your tax system. Tax is where I see the most stress and the most surprises, and it doesn't have to be that way. The reason business owners get caught out at BAS time or tax time is that they have been spending money that was never theirs to spend. Here is the fix. Every time revenue comes into your business, transfer a percentage of that into a second account that I mentioned earlier, your tax account. For most small businesses, I recommend setting aside around 25 or 30% of revenue. That covers your GST and PAYG if you do have employees, your super contributions, and a portion towards your income tax. Now, to further that, the exact percentage depends on your structure and your income level, but the principle is the same. Separate the money before you spend it. If you are registered for GST, you are lodging a BAS every quarter. The BAS includes your GST collected and your GST paid, as well as your PAYG withholding if you do have staff. If you have been putting money aside every week, by the time the BAS is due, the money is already sitting there. No stress and no scrambling. And here is a tip. You can actually include your income tax installments in your BAS as well. We do this with a lot of our clients. It means you are paying smaller amounts throughout the year instead of one big hit at tax time. The key is making this automatic. Don't rely on yourself to remember. Set up a recurring transfer every week, every time you do payroll. Treat it like a bill that has to be paid. Step number 7, run a monthly money review. This step ties everything together, and honestly, it is the one that separates business owners who are in control from business owners who are just reacting. You need to sit down once a month and review your numbers. I call this your monthly money date. It does not have to take long. 30 minutes is enough if your bookkeeping is up to date. Here is what you're looking at. Firstly, pull out your profit and loss statement for the month. Look at the revenue. Look at your expenses and look at your profit. Compare it to last month and to the same month last year if you have the data. Second, check your cash position. How much cash do you have in the bank right now? How does that compare to your operating expenses? Do you have enough cash runway? Third, look at your accounts receivable. Who owes you money? How long have they owed it? Is anything overdue that needs chasing? And fourth, look at your accounts payable. What do you owe? When is it due? And are there any big payments that are coming up that you need to plan for? And then ask yourself 3 questions. What went well this month? What did not go well? And what decisions do I need to make based off these numbers? This is how you start thinking like a CFO. You're not just doing the work, you're stepping back and looking at the business from above. You're making decisions based off the data and not your gut feel. If you do this every month, you'll catch problems early. You'll spot opportunities and you'll never be surprised by your numbers again. That's the system. 7 steps to set up your small business finances from scratch. Separate your accounts, track everything weekly, understand your costs, build a budget with a buffer, get paid faster, systemize your tax, and review your numbers every month. If you do these 7 things, you'll have more control over your cash flow than 90% of business owners out there. Now, if you want to go deeper on understanding your financial statements and how to actually read your profit and loss and balance sheet, I've got a video that will show you exactly what to look for and how to use those reports to make better decisions. I'll link it here. See you in the next one.